These are 7 top stocks in after hours with big percentage moves. While watching bullish after hours price actions, let us inform you our review on PRA. ProAssurance Corporation, known for its specialty insurance in medical and workers' comp, is making waves with its stock soaring 50% after announcing it's being acquired by the Doctors Company. The deal, valued at around $1.3 billion, offers $25 per share in cash, which is a 60% premium over where the stock was the day before. This is a big win for shareholders who are seeing some nice immediate returns. The acquisition is expected to wrap up in the first half of 2026, and once it does, ProAssurance will become a part of the Doctors Company. The merger brings together 2 strong players in healthcare liability insurance, meaning the combined entity will have more resources and scale to better serve healthcare providers across the country. For now, this is a solid short-term gain for investors, but long-term success will hinge on how smoothly the integration goes. If all goes well, the new company could be in a great position to grow and strengthen its place in the market. Our review on SAG Holdings Limited, based in Singapore, is in the business of providing replacement parts for motor vehicles and industrial engines. They're a bit of a one-stop shop, offering everything from OEM parts to their own in-house brands. Their operations are split between 2 main areas: on-highway, which covers parts for cars and commercial vehicles, and off-highway, which focuses on engines used in industries like marine, construction, agriculture, and oil and gas. Recently, things are looking good for them. Their sales are growing, especially in markets like the Middle East and Asia, and they're tapping into a lot of different industries. This gives them a lot of room to grow, especially with industries like agriculture and construction booming globally. What's interesting is that they're well-positioned in both the passenger vehicle and industrial engine markets, which means they can ride the wave of growth across multiple sectors. With all this happening, it's definitely a company to keep an eye on as they continue to expand and strengthen their foothold in the market. Our review on IMG CIMG Incorporated, formerly Newsy, built its name in specialty coffee with single-serve pour-over and brew bag formats. Now, it's expanding beyond coffee into broader consumer food and beverage markets, including maca-infused products. In a big strategic shift, CIMG's Chinese subsidiary is teaming up with Shanghai Huamao, a premium liquor brand. Under the deal, CIMG will acquire 51% of Huamao in exchange for 200,000 shares of CIMG stock. This move pushes CIMG into China's high-end liquor market, signaling a major pivot from its coffee roots. As part of the transition, Xiao Qinghao will become CEO of Shanghai Huamao, and there are plans for performance-based incentives for employees. This expansion into premium consumer goods could open new growth opportunities, but investors will be watching closely to see how CIMG balances its evolving product lineup. Our review on AGMH AGM Group Holdings Inc. is a tech company with a hand in both hardware supply chains and fintech blockchain ecosystems. It provides trading solutions, online financial education, and forex trading services while also developing and selling tech hardware. With operations spanning the U.S. and global markets, AGM has positioned itself at the intersection of finance and technology. Now, AGM is facing a challenge. Nasdaq has sent them a notification about failing to meet minimum bid requirements. This is the kind of warning that puts a stock on notice. If the share price doesn't recover within a set time frame, AGM risks delisting, which could shake investor confidence. The company will likely explore options to regain compliance, whether through a business shift, reverse stock split, or strategic moves to boost investor interest. Investors should keep an eye on how AGM responds, as it could shape the company's market position in the months ahead. Our review on APDN Applied DNA Sciences Incorporated is a biotech company working at the forefront of DNA and RNA-based technologies. They're involved in everything from producing synthetic DNA for next-gen therapeutics to molecular diagnostics and even DNA tagging for supply chain security. Essentially, they're blending science with real-world applications, whether it's helping develop mRNA-based treatments, providing genetic testing services, or ensuring authenticity in global supply chains. For investors, this is one of those companies where innovation meets market opportunity, but it's also in a space that can be highly volatile. Success here often hinges on regulatory approvals, commercial adoption, and strategic partnerships. Their work in synthetic DNA production and mRNA therapeutics could be particularly interesting given the broader push for advancements in genetic medicine. If they land the right contracts or breakthrough developments, it could be a strong catalyst for stock movement. On the flip side, delays or regulatory hurdles could add some bumps along the way. Either way, it's one to watch in the biotech space. Our review on AGH. Aureus Greenway Holdings Inc. is all about the golf experience, operating 2 public country clubs in Florida with sprawling fairways, clubhouses, and all the extras that come with a premium golf destination. Through its subsidiaries, the company runs everything from course operations to pro shops, food and beverage services, and membership programs. Whether it's a casual round, a high-end golf retreat, or just a stop at the clubhouse for a drink, Aureus is in the business of making golf more than just a game. It's an experience. For investors, the golf industry has its own rhythm. Seasonality, economic shifts, and consumer spending trends all play a role in performance. If the company is expanding its offerings, growing memberships, or upgrading facilities to attract more foot traffic, that could be a strong signal for growth. On the other hand, golf can be a capital-intensive business, and factors like maintenance costs, competition, and discretionary spending habits could impact the bottom line. If Aureus can strike the right balance between premium experiences and operational efficiency, it could carve out a solid niche in the golf and leisure market. Our review on ELAB. PMGC Holdings Inc. is a diversified company making strategic moves in biopharma, research, and investments. Its biotech arm, Northstrive Biosciences, is developing EL-22, a potential game-changer in obesity treatment by preserving muscle during weight loss. PMGC Research drives scientific innovation, while PMGC Capital seeks smart investment opportunities across various markets. The company is positioning itself as a player in multiple industries, with a focus on growth through strategic acquisitions and innovation. For investors, success hinges on execution. If EL-22 gains traction and investments deliver, PMGC could shape up as a strong multi-industry growth story with significant upside potential. Please subscribe, give the video a like, and watch more from our playlist. Thanks.